The digital advertising slowdown is escalating for Alphabet. The tech giant posted its fourth consecutive drop in profit in Q4, falling 34% year over year. But YouTube specifically seeing a nearly 8% decline in ad revenue. Roth Capital Partners Managing Director Rohit Kulkarni joins us now. Rohit, always great to get some time with you. Is this just the start of several bad quarters for Alphabet's advertising business, or was this the bottom?
I would say we are in the, sorry to use a baseball analogy here, we are in the probably bottom of fourth year. By that, what I mean is we're somewhere in the middle as far as downward revisions to where Alphabet might be going. In my opinion, Alphabet did earn a lot of incremental market share during 21 and 22. A lot of that was at Facebook's expense because of some Apple changes. I feel that slowly changes over the next 12 months, plus the economy. So I feel they are in this kind of middle ground where probably they are going to lose a little bit of extra market share. And on top of that, there is the ad recession, in my opinion.
Would you be concerned if you're Alphabet about who you're losing market share to and whether or not that market share will actually return?
I think it remains to be seen. As the pie starts growing again, in my opinion, perhaps we are not there yet. At some point in 23, we'll start to see the evidence of the digital advertising pie is growing at the clip it used to prior to the pandemic. High single digits, low double digits. When it starts, probably the incremental market share, Google will start earning back. But in the meanwhile, I think right now they are in a position where people spent a lot of extra money on search, and now they're finding better ways to find not just to Facebook but TikTok, to even Apple search, Instagram. So there are more places that are more settled down right now than what YouTube and search seem to provide. So that's I wouldn't call it this is kind of the peak market share for Google right now, but they're in this kind of window or a tunnel where they probably are going to be losing a little bit of market share.
Rohit, we just got a big jobs report, a big jobs report, a big number of jobs being added in January. Of course, Alphabet was one of the companies that announced cuts during the month of January. Are those cuts done at Alphabet and or at other tech companies?
I'm afraid in some cases like Alphabet, the signal yesterday that we got, which was a little bit of a surprise from the management team, is that they are going to slow down hiring, which was not something that an investor looking into a recession was willing to hear. So I feel there could be a change in stance, maybe 2 or 3 months down the road, where a company like Alphabet may feel the need to do additional cuts. May not be completely in headcount, but there are many different ways that these companies can save money, be it office buildings, be it real estate, be it travel, and various different ways. So I think there could be a combination of the ways that they would be looking to save some cash and just to kind of improve the sentiment with investors. So headcount reduction, possibly we are almost done. There could be small tidbits here and there in the next 3 months, but there would be, in my opinion, more cost reduction initiatives that would come out of Alphabet, is what I think.
Something else I want to ask you about is artificial intelligence, because Rohit, I heard one stat this morning that they talked about on the call. They mentioned the words more than 50 times. I have to say I don't listen to all of Alphabet's earnings calls, so I don't know. Maybe they've been talking about this for a long time, but forgive me for thinking like they're kind of jumping on the bandwagon here. I mean, what's the real opportunity here in AI for an Alphabet?
To be honest, as in from an investor perspective, Google has been a leader in AI for a number of years. We don't see that at the surface on the products, but under the surface, in my opinion, Google has always been a leader in AI. In the last 2-3 months, once you start seeing consumer adoption of new AI products, ChatGPT, for example, is touted as one of the fastest growing consumer products that people are adopting for AI. So I think Google is now forced to stake a claim that and remind people that, hey, look, we have been working on this for a number of years. We acquired DeepMind many years ago. Now they are going to provide more accounting disclosure on DeepMind. They talked about AI and new applications of AI that they are going to unlock and show consumers that, look, you can play around with Google-generated AI tools, just as there are many other places that you are doing right now. So I think, in my opinion, Google still remains the leader in AI. It is just that they are now forced to remind investors that, look, we have been working on this for a number of years. Just because a new toy or a new shiny whistle is coming along, don't forget about us.
And 20 seconds, Rohit, will a DeepMind-enabled Google search be able to go up against a ChatGPT-enabled Bing?
I would definitely put my money behind Google DeepMind and their search capabilities.
Rohit, thank you so much. Roth Capital Partners Managing Director Rohit Kulkarni. Appreciate your time on this Jobs Friday and also Big Tech Friday. Thank you.
Thank you.
On the former front, let's recap jobs real quick. The U.S. adding 517,000 jobs in January. Unemployment rate falling to 3.4%. Wage growth, though, still under control, rising 0.3% month over month, 4.4% year over year.